please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Very close to 10,650 and the Sensex 35,000 crossed.
We have a buy right now on ICICI. We want to watch. We don't think the big pain has still been recognized at Axis and the bad news is still completely out.
Provisions have been with respect to failed SDRs. Okay. So those hopefully stay to the plan.
We are expecting that within the next 24 hours, because of a good rainfall activity over Kerala, Tamil Nadu, etc. So within next 24 hours, it will set over Kerala and South Tamil Nadu.
There is very clear direction on how this how bond is actually built up. I think markets will continue to remain volatile.
The markets, of course, have had it good from the word go this morning, and it's not looked back since.
The last 15 minutes, interesting because from a key resistance, the market slipped a bit, especially on the Nifty, 10,683. Sensex at one point was up 300 points, going home with 200-point rally. Nifty is up 77. Bank Nifty up 300, but mid-cap index did well today.
Markets begin expiry week on a strong note. Nifty reclaims 10,700 intraday and Sensex ends the day 240 points higher.
Oil companies, oil marketing companies, that is, and aviation stocks surge as global crude oil prices slip below the $75 a barrel mark.
The day the rupee strengthens to levels not seen in 2 weeks, this halts the rally in the IT stocks. Tech Mahindra, TCS and HCL Tech end in the red.
Banks and NBFCs cheer as bond yields ease on the back of lower crude oil prices. Punjab National Bank and Canara Bank lead the PSU banking space, while PFC and REC take a point for the NBFC space.
Engineering giant L&T turns in a strong fourth quarter performance despite revenue growth missing the company's own guidance. Net profit jumps to a better than expected 3,100 crore rupees on the back of a surprise 7% rise in order inflows. Well, those were the top 5 headlines from the day's trading action. Hello and welcome to Markets Today Talkback, the show where we tell you all about 8 hours of trading in just 5 headlines. I'm Lata Venkatesh, with me Prashant Nair.
Lata, hi. So as you said, another good day, a great day actually, and third in the running. Over the next 30 minutes, we will wrap up the day's trading activity in just 5 stories, which basically capture what really happened today. Joining in to answer the questions that you send our way every day on Markets Today are our experts, Deepan Mehta, and on the charts we have Ashwini Gujral. Gentlemen, both of you, thanks very much for being here with us on the show. Before we start the Q&A session, as always, we'll just quickly wrap out what dominated trade and what were the key factors which drove things today. Lata.
Well, over the past, 3-4 months, what has creamed away the best of Indian stock performance has been the worsening macros. And that can be explained by just one word: crude prices. Today, you saw the reverse as crude prices took, a 6-8 percentage point fall from their Thursday, Friday highs. You saw India getting a better discounting because of the expectation that across the board in all asset classes, stocks rose. Nifty to 10,700. The rupee rose to 2-week highs, say 67, 25, 30, compared to highs of 68.40 that it had gone to. And bonds rallied as well, though part of the bond rally had happened on Friday itself when crude prices started rising. And all the concomitant parties were the ones leading the Nifty rally. There were oil marketing companies, airline stocks, NBFCs, obviously because of lower yields. But one important point to remember all through, especially when you looked at stocks like NBFCs, it was the weak ones that gained. So it didn't look like people were going out and buying the Bajaj Finance and the Bajaj Finserv. It looked like they were cutting their short positions in several weaker NBFC. It looked more like a short covering rally with weak stocks gaining a lot and strong stocks not doing much. But for more stock-specific action, Prashant.
I mean, so if you can qualify PSU banks as weak stocks, well, that's top of the list in terms of what gained. And it continues and picked up from where it left off last week. So, I mean, last week, The index was up, what, 11%, 11.5% this week. It started straight away with about 2.75% gain. The PSU Bank Index. The Nifty Pharma Index was up 2.5%. The Pharmaceuticals Index was up about 2%. These are the large cap stocks which did well. Sun Pharma, Lupin, Larsen & Toubro, Bank of Baroda, Asian Paints, anything between. I mean, of course, Sun Pharma was out by far the standout gainer, 7.5%. Everything else in the 2 to 3% range. Strength in oil and gas, and as expected, HP, GAIL, IOC, there were aviation stocks which did quite well as well. SpiceJet is a case in point. Technology was the only sector which was down, but down meaningfully. I mean, the IT index lost about 1.9%. Tech Mahindra, HCL Tech, TCS, well, currency, anyone? Probably that's the reason. Well, broader strength, you had, gains in Just Dial, big one, almost 20%. Don't remember the last time we've seen this kind of move there. Canfin Homes, 11%. Spark was higher. You had names like Delta Corp, Jet, that's Jet Airways, Edelweiss, PNB, PFC, Mahindra & Mahindra Finance, and I could go on with a few more, but these were essentially some of the larger heavily traded names as well. Broader weakness, so Lovable Lingerie was down 12% plus, Manpasand was down 20%. Of course, there is news flow there. Divi's Laboratories was down 5%. NIIT Tech and Avanti Feeds were the other names which were lower in trade. Lata.
Okay, and let's straight away take it to our guests. Ashwini, you go first. Market surge. Now, I think this is the third consecutive day that we are closing higher. 10,700 on the Nifty. Is it likely to go even higher? Good to go more?
First of all, it should be very clear that in this market, which is so sideways, a 3-day decline of 250, 300 points or a 3-day rally of 250, 300 points does not have any longer term implications. We are basically within the 10,000, 11,000 band. Now, sometimes, crude will fall $10, at other times it will go up $10, and the market will oscillate, between these two pieces of sentiment. So I don't think you should become bullish because of this rally, or you should have become bearish at 10,400, because crude can go back to 80, everything can turn on a dime. So that way the easy short covering is done. There could be a bit more tomorrow. You could possibly dip, say 30 to 50 points on the Nifty to about 10,620, 650, and you try to buy it out there. But the big short covering is probably now done.
So that kind of nicely sets up for the next couple of stories. The short covering mostly behind us, as Ashwini is pointing out. Well, the second story then. Shares of oil marketing companies surged in trade after crude oil prices fell below the $75 a barrel mark. The prices slumped after Russia, the US and OPEC said that they may increase the output to ease oil production cuts. IOC, HP, BP were all up more than 4%. Aviation stocks also took off in trade. SpiceJet saw an almost 20% rise, while Jet was up more than 7%. Interglobe Aviation, the leader, was also up by 3%. Let's in fact listen in to David Lennox of Fat Profits, who gave us his outlook on oil prices.
At this stage, we'll be very happy to keep that range at between 74 to 84. We're not at this point really ready to change our range. We do now have to wait and see if, in fact, OPEC and the Russians do follow through and do lift that ceiling production.
Okay. Well, that brings up the question, obviously, whether we should now look at aviation stocks. Actually, there is a viewer with that question. Girish Patel has written to us. He wants to know the future of Jet Airways. He says he has bought the shares of the company at 215 rupees. Oh, he's sitting in a lot of money. Well, what do you think, Deepan?
No, I think that aviation is a good sector to be in from investor perspective, but buy the best, which is Indigo, Interglobe Aviation. And if you look at the numbers also, consistency, balance sheet quality, I think on all these parameters, Interglobe Aviation certainly does score. And Jet has been a turnaround story, but from time to time they tend to disappoint when the quarterly numbers come. So I would say that SpiceJet, if you have a more risk appetite, or then Interglobe Aviation, you could convert out of Jet into these companies and make a good return. I think over a longer period of time, Spice and Interglobe should outperform Jet Aviation. Jet Airways.
Okay, well, with that, let's get to the third headline of the day. The rupee strengthened to a 2-week high, halting the IT stocks rally. Tech Mahindra was down almost 4% despite posting strong Q4 numbers. TCS, HCL Tech both took a hit, more than 2% down. And with that, we have a question.
Twitter user Angad has 500 shares of Infosys, for which he's paid 1,180 rupees each. He wants a short-term view on the stock for about the next 1 to 2 months. Deepan, any thoughts? Infi.
1180. So
we've been
he's
negative on all IT stocks, including Infosys. Short-term, long-term, medium-term. I think at every rise, one should look at getting out of tech even at these levels. You don't want to buy into businesses where there is single-digit growth rates. There are far other businesses domestically oriented available with high mid-teens kind of growth rates, and that's where I think investors should be looking at investing and not technology per se.
Have you looked at L&T Tech by any chance, Deepan? I mean, you said single-digit L&T.
mid-cap techs, basically.
Yeah. L&T.
I mean, mid-cap tech also, certainly because of the base effect, they tend to give you that slightly 15-16% type of growth rate. But I'm not sure about the consistency over there. And, we made this mistake earlier where at some point of time, large cap tech started doing badly and mid-cap tech was surviving and still showing growth rates. And then we had a turn down in mid-cap tech as well. So I would say best to avoid most technology companies. If you ask me for one name where we are invested in, that is Tata Elxsi, which has a slightly differentiated business model. But by and large, I think you will have these counter-cyclical, trend rallies in technology taking place and 1 or 2 good quarters coming through as well. But when you look at a 3 to 5 year period, I think there's no visibility as far as software companies are concerned.
Deepan Mehta and Ashwini Gujral have been taking all your questions, answering your queries. We've been, of course, wrapping up the day's events in terms of 5 stories, as we always do. We got through 3, so here's the 4th headline of the day. Banks and NBFCs cheered as bond yields eased on lower crude oil prices. Punjab National Bank and Canara Bank led the banking pack more than 4%, while PFC, REC and India Bulls Housing were leading the NBFC pack. Lata, I mean, there is some relief there.
Oh, yes, I mean, that's to be on expected lines. A fall in crude prices immediately impacts inflation expectations. And therefore, you saw, in any case, the bond yields have been running away and staying at very high levels. So already on Friday, because the bond markets close at 5 o'clock, they had registered a goodish bit of the fall. The yields had already fallen to about 7.79 from 7.88 on Friday. Today there was a further fall of about 5 basis points. For the NBFCs, because we closed earlier in the stock markets, they had to take into account the Friday gain in bond prices as well as today's gain. So you saw substantial gain. But again, I want to repeat what we started the show with. It wasn't as if the marquee NBFCs rose today, like the Bajaj Finserves and the Bajaj Finance. It was more the Canfin Homes kind of guys who rose, which already saw a lot of shorting, selling. So in terms of quality of NBFCs, the biggest and the best were not the ones that gained. It was the ones that had been earned the ire of short sellers that gained.
Okay, we got questions now. So we got a viewer, Bharati, who sent us a question on Canfin Homes. 50 shares is what Bharati has. The purchase price is 527 rupees a share. He's a long-term investor, wants to know how long can he hold the stock for. I mean, and how long should he hold the stock for really? I mean, Ashwini, sorry, why don't you take this one? I mean, price is 400 or so now, the CMP.
The trouble with any sort of PSU is that they keep shooting themselves in the foot. So whatever you do, whichever sector, don't think that the PSU there will do great wonders. So you have to be with Bajaj Finance, Bajaj Finserv, Edelweiss, NBFCs which are making new highs. And this sort of rally is giving you possibly very good levels to exit from the stock.
Okay, a similar question to you actually, but a wider one, Deepan. NBFCs, how would you approach the space now? It's quite possible the Reserve Bank gives a rate hike on June 6th itself. If not June 6th, it may come in August, but we are clearly headed for higher yields.
That's true, I think, and within the NBFC space, I think if you are risk averse, then go with the housing finance company, the likes of Bajaj Finance. But there are a whole host of microfinance, SME lenders, which have got a very high margin, net interest margin. And their main USP or the business model depends upon collection efficiency. So investors with a little bit more risk appetite can look at those companies like a Capital First. Or even if you want more safety, then maybe a Bandhan Bank or Bharat Financial Inclusion, which is getting merged into IndusInd. Bajaj Finance, of course, is one of the prime, prospects in that category as well. But I would say avoid the housing finance companies, intense competition over there. And I think that, they're going to face pressure as far as NIMs are concerned. And although the balance sheet quality is by and large stable, the competitive pressures are eating into the growth rates over there. And then you have the private sector banks. I think great choice over there, the top 4 or 5 private sector banks, excluding ICICI and Axis Bank.
Okay, well, of course, they have a lower cost of money. Okay, with that, we'll come to the fifth and the last headline of the day, and that's reserved for the one whose results came after market hours. Engineering giant L&T. It turned in a strong performance in the fourth quarter. This despite revenue growth missing the company's own guidance. However, net profit jumped to a better than expected 3,100 crore rupees on the back of a surprise 7% rise in order inflows. But Anisha Jain, who has heard through the press conference and the company presentation closely, is here with the key highlights. Anisha.
Well, yes, Lata, you already have the numbers. I'll take you through what the management said in the conference that they just held for the media. Now, first up, the FY19 guidance. They're guiding for a revenue growth of 12 to 15%, order inflow of 10 to 12%. EBITDA margins are expected to remain stable with the upside bias of 25 basis points. Now, this guidance will be taken in well by the street because all the analysts on the street were just hoping for a double-digit guidance. So this should go down well with the street. Other than that, importantly, the management also talked about the working capital being at around 19.3, 19.4% level. That will remain really important because in the last quarter it had deteriorated to 21%. So that should also go positively. Other than that, the management talked positively about the infrastructure segment of the company, how hydrocarbon has really bounced back. They do see some pain in the power segment, but the order inflows that they have seen in the domestic infra segment is what is expected to push the performance for the company going forward as well. Infra segment, remember, in the quarter gone by was up around 15% and the overall margins were a positive at 13.2% versus 12.5%. Tata, my guess is that the street will take these numbers well and would react positively tomorrow. Back to you.
Anisha, thank you very much for that L&T snapshot. We've got a question on L&T. Twitter user Pabitra wants to know the view on L&T. She's got 50 shares. She's paid 1,200 rupees each for them, so she's sitting in some money. Deepan, what would you tell her?
I think best to remain invested, good set of numbers, and finally L&T's strategy of focusing on profitable orders is coming through, and now with revenues also looking up because of higher order inflow and better execution, you can expect the operating profit margins to surprise on the upside. Operating leverages also will kick in. It's a bit of a complicated company, but by and large I think all businesses are firing on all cylinders. So you could see a good, in terms of growth rate, top line, bottom line, and stock price return for L&T over the next 3-4 quarters or so.